Navigating the Bitcoin rollercoaster, unpacking the surprising price dip amidst rising inflation and political uncertainty. As a writer who has been covering the financial world for years, I have seen many ups and downs in the markets. However, nothing quite compares to the volatility of Bitcoin. Introduction to Bitcoin and its volatility. Bitcoin is a digital currency that operates independently of a central bank. It enables peer-to-peer transactions without the need for intermediaries, such as financial institutions. One of the main reasons for its volatility is that it is decentralized and largely unregulated. This means that the price is determined purely by supply and demand, which can fluctuate wildly based on a variety of factors. Exploring the factors influencing Bitcoin's price. One of the biggest factors influencing Bitcoin's price is the economy. When the economy is doing well, people are more likely to invest in Bitcoin as they have more disposable income. Conversely, when the economy is struggling, people are more likely to sell their Bitcoin to raise cash. Another factor is inflation. As the value of traditional currencies declines due to inflation, people may turn to Bitcoin as a store of value. If people lose faith in traditional currencies, they may see Bitcoin as a safer alternative. The impact of inflation on Bitcoin's price. Inflation is a key driver of Bitcoin's price. As the value of traditional currencies declines due to inflation, people may turn to Bitcoin as a store of value. If people lose faith in traditional currencies, they may see Bitcoin as a safer alternative. Bitcoin has a finite supply of 21 million coins, which makes it a deflationary asset. This means that as demand for Bitcoin grows, the price should rise. In contrast, traditional currencies are inflationary assets as central banks can print more money, leading to a decrease in their value. Political uncertainty and its effect on Bitcoin. Political uncertainty can also impact the price of Bitcoin. When there is political instability or war, people may see Bitcoin as a safe haven asset and invest in it to protect their wealth. For example, during the 2020 U.S. presidential election, there was a lot of uncertainty around the outcome. As a result, the price of Bitcoin rose as people sought to protect their wealth. Understanding the recent price dip in Bitcoin. Recently, Bitcoin experienced a significant price dip, which caught many investors off guard. The dip was largely attributed to a crackdown on Bitcoin mining in China, which resulted in a decrease in demand for Bitcoin. This highlights the importance of keeping up to date with news and events that could impact the price of Bitcoin. Investors need to remain vigilant and be prepared for rapid price movements. Strategies for navigating the Bitcoin rollercoaster. Navigating the Bitcoin rollercoaster can be challenging, but there are strategies that investors can use to manage their risk. Diversification is one of the most important strategies. Investors should not invest all their money in Bitcoin, but instead, spread their investment across multiple assets. This helps to mitigate risk and protect against sudden price movements. Another strategy is to set stop-loss orders, which automatically sell Bitcoin if the price falls below a certain level. This helps to limit losses and protect against sudden price drops. Long-term outlook for Bitcoin amidst rising inflation and political uncertainty. Despite the recent price dip, the long-term outlook for Bitcoin remains positive. The increasing levels of inflation and political uncertainty around the world are likely to drive demand for Bitcoin as a safe haven asset. In addition, more institutional investors are starting to invest in Bitcoin, which is likely to drive demand and push up the price. The role of institutional investors in Bitcoin's price movements. Institutional investors, such as hedge funds and asset managers, are increasingly investing in Bitcoin. This is due to the growing acceptance of Bitcoin as a legitimate asset class and the potential for high returns. The involvement of institutional investors is likely to drive demand for Bitcoin and push up the price. However, it also means that Bitcoin is becoming more mainstream, which could lead to increased regulation and a decrease in volatility. Expert opinions on the future of Bitcoin. There are many different opinions on the future of Bitcoin. Some experts believe that it will continue to rise in value and become a mainstream asset class, while others believe that it is a speculative bubble that will eventually burst. However, most experts agree that Bitcoin is here to stay and will continue to play an important role in the financial world. Conclusion: is Bitcoin a safe investment amidst economic and political turmoil? In conclusion, Bitcoin is a volatile asset that requires careful management and monitoring. However, it can also be a safe investment amidst economic and political turmoil. Investors need to remain vigilant and keep up to date with news and events that could impact the price of Bitcoin. They also need to diversify their investments and use strategies such as stop-loss orders to manage their risk. Visit stonksmaster.com to monitor the expected price ranges of Bitcoin, the Dow Jones Industrial Average, gold, silver, and oil in good times and bad. Let's ask Claude. We decided to ask Claude Instant, via Poe, a similar question and see what its reply would be. Question: why has the price of Bitcoin dropped, despite inflation, war in Ukraine and the Middle East, and political instability? Answer: there are a few potential factors contributing to the recent drop in Bitcoin's price. Interest rate hikes. The Federal Reserve and other central banks have been aggressively raising interest rates this year to fight high inflation. This has made riskier assets like crypto less attractive as fixed income yields from bonds become more competitive. Macroeconomic uncertainty. Events like the war in Ukraine, economic struggles in China, and recession fears have driven a general risk-off sentiment across markets. This tends to hurt more speculative investments. Overextended rally. After surging in 2020 to 2021, some argue Bitcoin's price was overextended and due for a sizable correction. Major pullbacks are common after big crypto bull runs. Technical factors. Bitcoin faced resistance around the $20,000 to $25,000 level after multiple failed breakout attempts earlier this year. This resistance may have accelerated selling pressure. Liquidations. As Bitcoin dropped, parked leveraged long positions were liquidated, fueling further price decreases. This can create a feedback loop. So in summary, while traditionally a hedge, crypto is still a risk asset and moves with broader market sentiment. The recent risk-off environment has outweighed factors that could offer Bitcoin support like inflation concerns. Technicals also played a role in the extended decline.